Hello everyone, hope you're doing well. Let's keep this episode of Monday Markets brought to you by the FTX app concise and to the point. So, monthly time frame, what can we see? It should be self-evident that at the moment, the monthly range midpoint is acting as resistance and has acted as resistance, especially that top level ended up being very accurate. As you'll recall, the consolidation we're trading within is range high 58.60, range midpoint 44.47, range low 35.37. We rallied from 35.37 into 44.47 and found resistance there. So this is still looking like a monthly time frame bearish retest at the moment. You'll recall that the bullish idea was contingent on a monthly time frame acceptance through the range midpoint into the range high and perhaps the daily breakout sticking, and both of those things working in unison. Neither has taken place. If we look at the weekly time frame, not too different there. Those same monthly levels just visible on the weekly time frame, rallied into the extremity, if you will, and sharp rejection therefrom. If we add the booming moving averages, which I've affectionately titled thus, you can see that it was really just a poke into these levels. You overshot the 21 and the 50, the 200 daily acting as the pico top for the time being. But in any case, this cluster of mean reversion comprising of the moving averages and the range midpoint and all this other mean stuff ended up acting as resistance. And so that, until proven otherwise, is a bearish retest. So what would be bullish, or what would signify the market reaching levels of support? Well, first things first, purely on a kind of monthly eye test perspective, I continue to believe, especially given how this monthly has reacted, that the monthly levels are still relevant and acting well in this market, which is to say that we've moved from simply between monthly areas ever since the market topped, right? So if we moved from monthly support to monthly resistance, assuming monthly resistance has done its job, which it appears to be doing, I expect the next target for a move to be, or the next area to do business, at least from a trading point of view, in terms of trading at compelling structures, to be monthly support at 35 to 37k. On the weekly time frame, Don and I briefly discussed on Casual Friday this weekly cluster here. There is still a world in which, we end up making some sort of early wick and then ultimately consolidating close to 41 and 42k. As positive as that may look on the weekly time frame, that really wouldn't change my view personally, because there's still all this overhead resistance stuff that needs to be cleared. So in the short term, maybe we get a bounce from or even into this area. Maybe that's our nearest resistance if this looks very pukey. But in any case, unfortunately, this weekly cluster isn't going to be the basis of a trade idea for me, because better support is below us and better resistance is above us. So I'm not going to put too much weight into this, but I think it's reasonable if you do. I won't hold that against you. On the daily time frame, that's where the daily failed breakout became probably the most obvious time frame for it, and the market was kind enough to even retest it as resistance before this most recent leg lower. As you'll recall, with any type of range trade, what the market essentially does is it consolidates, then it breaks or attempts to break through a range boundary, and price is either accepted through that boundary, in which case it keeps going in the direction of the break, that is, accepted through the range high goes higher, accepted through the range low goes lower. On this occasion, the market attempted that structure, specifically attempted to break and find acceptance above the range high, but then ultimately failed and even found resistance at that level before trading lower. So in terms of this consolidation, where are the important levels? Well, as I said, the monthly time frame has been really good. I see no reason to stop using it. And for me, that 35, 37k bottom of the range is still really attractive as a magnet for price, if you will. In the interim, if they're going to be some sort of oversold bounce spots or areas for this to slow down. I mean, just in terms of eye test, we know that this is the range high at around mid-40s, range low at mid-30s. Potentially, we could have a midpoint around 40k for some sort of interim bounce, or, for the market to find a level there. But again, for me, it's just not terribly compelling. The monthly levels are really good, and I see no reason to trade anything outside of those monthly levels. And again, the prevailing narrative is still that we've had now this confirmed breakout attempt, which failed with a flurry of public buying, yada, yada, yada. And so I'm not looking to fade that too early, certainly not in the absence of really good levels or what I feel are really cheap prices. So what would be bullish? Well, two things. One is price either reaching support and or the range low, where the expected value of being long goes up and the risk reward of long setups becomes more definable and attractive. That would make sense. Or alternatively, if this bearish setup starts to fix itself, which is to say a rally back through the range high, which doesn't get rejected and actually finds acceptance, that would be positive as well. And one final note on this potential future setup. And again, it could look like this and eventually find its way through the range high, right? It doesn't need to happen immediately. But in any case, I think trading back above 44K in the short term, this is strong resistance, given that, it was resistance for ages. We broke above, no dice, and therefore it's once again a level of resistance, with this price action being the failed breakout portion. But what you'll often see with ranges is once you have the failed breakout take place, and this level is once again resistance, if the market trades back above where the failed breakout took place, it's generally less likely that you get a second bit of price action that looks like the deviation. Like, it's kind of a fool me once type of thing, where if you've already got one impressive failed breakout or trap pattern at the level, it's far less likely that you get a second failed breakout or trap pattern at the level, which is to say that, if the market shows some relative strength into 44, 46, and wherever this dump stops, whether it's at the mid-range, maybe it's at the range low, maybe it's at zero, in any case, if you're looking for positive signs or you want to buy strength, I think trading back above 44K, the probability of getting this price action again is lower, and the probability of continuation towards the previous targets of 52K or whatever it may be is higher. Long story short, monthly time frame at resistance and reacting off of resistance. Weekly time frame, same levels and hit a bunch of those moving averages, which acted as resistance and did not flip the trend bullish. Daily time frame, failed breakout, which is currently unwinding. In terms of bounce areas or whatever else, there may be something closer to 40K as the range midpoint between this consolidation. The higher time frame, much more compelling support is, as always, the range low at 35 to 37. If you're not interested in buying dips and are looking for signs of strength to get back in, I think if the market makes another honest effort at 44 to 46, 47, now that we've already had a failed breakout, a second one is less likely, and therefore the likelihood of a bullish setup from that reclaim is improved. That's all for now. Hope this was helpful. As always, keep an eye on NASDAQ and US equities and all that. I don't think a decoupling is in the cards anytime soon. That's all from me. Have an excellent week, and I'll see you trletter.com for the free weekly newsletter, Don stream, Casual Friday, all that good stuff. Thank you for your kind words, for the support. Take care. That's all from me. Goodbye.